Everyone's asking me the same question. Antonio, when will Toronto real estate prices bounce back? Well, I just analyzed the latest August data from the Toronto Real Estate Board, and I've got an answer that might surprise you. 11 months. That's my prediction for when this market will actually look healthy again. But here's what's really interesting. We're already seeing early recovery signals that most people are completely missing. Sales are up, inventory is finally dropping, but prices are still falling. If that sounds confusing, stick around because what I discovered in this data could save you from making a massive timing mistake. My name is Antonio with the Andy Sands team, and I've been tracking GTA market cycle for years. In the next 8 minutes, I'm going to break down exactly where we are in this recovery, why everyone's getting the timelines wrong, and what this means for your next move. But first, let me show you the numbers that are telling a completely different story than the headlines. Alright, let's dive into what's actually happening in the Toronto market, because the story the data tells is way more nuanced than what you're hearing. August sales came in at 5,211 transactions. Now that might not sound exciting, but here's what's significant. That's a 2.3% increase from last August. For the first time in years, August sales didn't fall further. Let me put this in perspective. For the past 4 years, every August we've seen about 300 fewer sales than the year before. The market was consistently losing steam. This year, that trend finally broke. But here's the real story. Inventory. This is where it gets interesting. We hit peak inventory in June at over 31,600 active listings. That was brutal for sellers, but then something changed. July inventory dropped 4.4% to about 30,200 listings. And August, it dropped again to 27,495. That's a 9% decrease from last August. For the first time this cycle, we're seeing absorption happen. Now, I had a seller client in North York who listed in June when inventory was at its peak. 3 showing in 2 weeks, no offers. We put it off the market. He asked me, Antonio, should I try again in the fall? I told him, let's wait and see what the August numbers tell us. Well, the August numbers are telling us that absorption is finally happening. Buyers are starting to digest the inventory that's been sitting on the market. Now, here's where I need to be completely honest with you, because while we're seeing these early recovery signals, prices are still telling a different story. Detached homes in the 416 are down 10% year over year. Even condos, which already took their big hit earlier in this cycle, are still down 2%. We're sitting 20 to 25% below peak prices across all property types. And there's the thing. With 27,000 active listings still on the market, that's a lot of inventory for buyers to choose from. When buyers have that much choice, sellers can push prices up. It's basic supply and demand. Let me share a real example. I recently helped a buyer purchase a condo in Vaughan. This building completed in 2020. Originally sold for $653,000. My client was able to secure it for just $497,500. That's a massive drop of about $155,000, or nearly 24%. This is happening right in the heart of VMC, where many new condo buildings have been completing over the past few years. But here's what's encouraging. Downtown condos saw inventory drop 10% from July to August. That tells me first-time buyers are finally feeling confident enough to step back into the market at these price points. Detached homes are showing even more strength. Inventory down 15%. York region is a bit slower with both condos and detached down about 7%, but that's still movement in the right direction. So here's how I calculated that 11-month timeline. And this is based on historical market patterns and current absorption rates. Back in August 2019, we had about 16,000 active listings. That was a healthy, balanced market. Today, we're at 27,000 listings. That means we need to absorb about 11,000 excess listings to get back to normal. Now, if inventory keeps declining at an average of just 5% per month, and August show us a 9% decline, so this is actually conservative. It would take approximately 11 months to reach those 2019 levels. But here's what I'm seeing that give me confidence in this timeline. We identified the recovery formula and we're already checking off the boxes. Step 1. Stop the bleeding. Sales are no longer declining month over month. Check. Step 2. Rebuild confidence. Inventory is finally shrinking while demand is picking up. Check. Step 3. Build momentum. When inventory shrinks consistently while demand grows, that's when prices start to stabilize and eventually recover. I had a conversation with a client last week who said, Antonio, should I wait another 6 months to buy? I told him, look, if you find the right property at the right price, don't try to time the bottom perfectly. We already seen the early signs of recovery. The reality is by the time everyone recognizes the recovery, the best opportunities will be gone. So what does 11-month timeline actually mean for your buying or selling strategy? Let me break this down by where you are in the process. If you're thinking selling right now, here's my honest advice. Unless you absolutely have to sell, you might want to wait. We're still in the early stages of recovery, and sellers won't have significant leverage for at least another year. I just had this conversation with a seller in Richmond Hill. A beautiful detached home, well maintained. He wanted to list now because he heard the market is recovering. I showed him this data and said, the market is stabilizing, but it's not recovered yet. For buyers, this is actually great news. You got about 11 months of favorable conditions ahead of you. More choice, better negotiating power, and sellers who are motivated to make deals. But here's the key. Don't wait for the absolute bottom. When you find a property that checks 80% of your boxes and is priced fairly for today's market, that's when you act. I helped buyers last month find a townhouse in Vaughan. It had been on the market for 45 days with no offers. We offered $105,000 below asking and got it. A year ago, that same property would have had multiple offers over asking. The bottom line is this: we're in the early stages of recovery, but recovery takes time. Don't expect dramatic price increase anytime soon, but also don't expect conditions to get much better for buyers when they are right now. So there you have it, my 11-month timeline for Toronto market recovery based on the latest August data and historical patterns. We're seeing the early signs, sales have stabilized, inventory is finally dropping, and absorption is happening. But we're still 11,000 listings away from a balanced market, and that's going to take time. The key takeaway: don't try to time the market perfectly. Whether you're buying or selling, focus on your specific situation and make decisions based on good value, not market timing. If you're thinking about buying or selling in the GTA and want to discuss how this timeline affects your specific situation, I'll be happy to chat. You can book a call with our team. All the information is in the description below. And if you found this market analysis helpful, make sure to subscribe and hit the notification bell. I do these deep dives every month when the Toronto Real Estate Board data comes out, and I always try to give you the real story behind the numbers. What do you think this 11-month timeline? Are you planning to buy or sell during this recovery period? Let me know in the comments. I read every single one and I'll give you my honest thoughts on your situation. Thanks for watching, and I'll see you in the next video. Bye.